How you can make money with a smaller account size. Today's video, that's what I'm going to be talking about, and I'm not going to waste any time. Let's get into it right away. So first, we see we're on Bitfarms right now, and one key thing that you're going to want to do is if you have a small account size, you're not going to want to be buying into big positions like, let's see, if I have any, I don't really have any on here, but Nvidia, let's see. If you have $1,000 to your name, you're not going to be wanting to buy these expensive stocks that are $185 per share. So that just wouldn't make a whole lot of sense. So therefore, we try to find stocks that are around, the cheaper the better, honestly. But when you go too cheap, like some of these, you know, it's, you get like a 30-cent stock, it's not as good. But we're looking for one that's like this. Hive is a good option. And today we're just going to be looking at Bitfarms because that's the main one that I had the position that I wanted to show you guys. So as you can see here, this is the full move that I'm going to be showing you, and we're going to bring the entry down to here. This move isn't obvious for a lot of beginners, and just to preface this strategy we're going over today is swing trading, and we're swing trading the breakout structure. So we see a move down, and then we see a little move up, and it comes here, and then it does a pullback. And a lot of times you should not trade when the 10 goes below the 20, but let's just say you saw this jump up, this gap up in the market. That's why I put this entry at around here. So the whole point of our strategy is to try to get momentum trades, try to get momentum stocks that are moving volatile, because we don't have that much money in our account. So we have to take more risks. We need stocks that are volatile, and we need stocks that are going to go up and down, and we need to catch one of those big moves up. That's the whole point of this strategy. That's how you can make, that's really the only way you can make money if you don't have a big account size, is to make risky trades. And I'm going to explain why they're not even risky, but yeah. So when we enter a trade, we want to enter the trade with a tight stop loss. We want to have, on the 5-minute time frame, we want to enter as soon as we could into one of these. What we're trying to do is catch it on the move up, obviously, so we want to enter in as soon as we think that market is going to go up. And there's a ton of different indicators, and I'll go over those in other videos, but we want to try to catch the move as early as possible on the way up. So let's say we got in at 240. We saw this big gap up pre-market, and we jumped in the trade, which would be a very good entry. I don't even think maybe I would have taken this trade. But as you can see on the way up, the 10 goes above the 20. So on this move right here, you would enter in, and you would put your stop loss at the 5-minute time frame, like I am right here. So whatever this first red candle and then the green one, you enter in, and then you put your stop loss right at the bottom wick of the candle. So you would be putting your stop loss at 237 at a 240 entry. So that means if you had, let's say hypothetically, $1,000 into this position, or no, let's say 5,000. So you had $5,000. Let's go 5,000 divided by 237, which would be your entry, or 240 would be your entry, sorry. 240 is your entry. That's 2,083 shares. All right, so we got 2,083 shares of this stock. And if that went down 3 cents, you would only lose $62, which is not very much at all. But when you hear the upside, you guys are going to be listening. All right, so this stock right here went from 240 all the way up to 291. And keep that in mind. That is a 51-cent increase. So we'll put 51 cents right here to remember it. And we come here, all right, boom. We would not have any expedition to exit this trade, and we only want to exit the trade once the 10 moves below the 20, and that's why I put this marker right here. So that's when the 10 went below the 20. That's an indicator that we shouldn't trade. If you're a really good trader, you can trade, but regardless of the point, there's no reason to take out of this position. Our position would last from Friday the 2nd to Monday the 5th. That's a 3-day position, and if you had a $5,000 in there, we would say 5,000 divided by 240 because that's how many shares we have. We have 2,083.333 shares. All right, so now we know that we had a 51-cent increase. Boom, 51 cents. That's an $1,062 profit margin on a trade that took 3 days with only $5,000 in your account. And I know some of you guys may be thinking 5,000 isn't a small account, but that is a very small account compared to other people. Everybody has a relative account size, and I'm going to tell you the raw truth here, guys, is if you don't have more than $5,000 in your account, you're not going to be making these crazy numbers that you see people on social media. I'm sorry to tell you, but you are not going to be making these crazy big trades. Hypothetically, it's good to work your way up. You can practice the same strategy, and you can slowly increase and grow the value of your account, because let's say even if you had $1,000 in this position right here, if you have a very small account size of $1,000 and you're able to buy, let's see how many shares that'll be of 240. So you're able to buy that. You're about able to buy 416 shares of that stock. And if it goes up 51 cents, you still made $212 with only $1,000 in the matter of 3 days. And if you're not content with that, you're not going to make it very far in trading, because it's a slow process, as we know. Trading isn't one of those things where you just come in with no money and you're able to make millions. I know people that trade futures and Forex. They have funded accounts, but they have so many hula hoops on those that the average trader isn't going to be able to have success. But the average trader can have success in this, because what we're doing is following the momentum. We go off the news a little bit, not too much, but we're mainly just going off what we see on the charts, because that's telling us the whole story. And for you guys that are wondering how to know when to exit a trade, as we said, the 10 goes below the 20, but you can kind of just see a cascade of things. All right, so when we're first making these initial moves up, boom, 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 it's going up. We know that market wants to trend in that direction, and boom, we get a consolidation. We get a little pullback, but it consolidates, and then it comes back up here, that flag move, and then it tightens up, and then boom, it expands up. There is nothing in this trade that is saying that we should exit the trade. But when we come up here, you will see the difference. Boom, we come up, tightens, 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 goes up even more, and then boom, tightens, and then starts to go downward. Okay, that is maybe showing us that market is wanting to go downwards, because we get these big moves down. Usually the stock isn't going to come all the way down and then just pike back up, but you never know what's going to happen in the market, so you always can be shocked. But when market is trending downward and the 10 closes below the 20, you're coming down and you see this boom, this red right here. And then you see market try to go back up, and then it just comes back down and comes back down. And as you can see, like I just said, it makes this little dip where it dips and then goes back up. But that's not what we want to be trading. We don't want to be trading these positions right here, because market has no consistency on what it's doing. We want to trade patterns like this, where we see boom, goes up, tighten, tighten, goes up. We want to trade positions like that. We don't want to enter positions that come straight down and go straight up. That's not a smart position to enter into. So we want to avoid positions like that. And let's see if I can go back here and find a position that would be a good position for you guys to enter. All right, so right here, let me find a different one. I didn't like that one very much. All right. As you can see, this is another example. So boom, this is for a short. Boom, or no, let's take this one. Actually, this one's perfect. All right, so we have this really big trade right here. So boom, maybe you didn't catch this big move up. This was a huge move. Maybe you did not catch that. You might have thought you're too late for the position. But what happens is we come here and then we get a drawback. It doesn't just go, a stock doesn't just go straight up, straight up, straight up all the time. There's going to be some pullbacks, there's going to be some red candles, there's going to be some downward trends, but it's ultimately going to come back up. And what you can see right here is it comes up, tightens, 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 and then boom, it explodes up. And then as for the short position, you can see it's just the other way. Where was that short? For the short position, you can see right here. All right, stock is trending downward, downward, boom. And then it makes a little effort to go up. Just like usually before a big breakout, it comes down a little bit, tightens, boom, upwards. This did the opposite. It came up, boom, boom, tightened. We already saw right here that market wanted to go down. It retraced itself up a little bit, and then boom, tightened up. And instead of going upwards, we know that market is trending downwards. So boom, what does it do? It goes straight down. And then we do a downtrend. And Bitfarms hasn't been an amazing stock lately. But I always keep it just on my portfolio because it does moves like this where it move up, consolidates, boom, it goes up. Like there's so many different positions that you can take, and the great thing about this strategy is you pick a sector that you're interested in. Like there's so many different sectors that you could go, and what I don't want you guys to do while you're watching this video is try to trade all the different sectors, because that's not going to work for you. What you can do is find something that you're interested in or something that you think is the future. I trade tech stocks because I feel like technology and AI is the future. So I'm focused on tech and AI stocks because I know that they're always going to have a market, and these big AI companies are making shitloads of money because that's where everybody's investing. So I'm in that strategy. You can pick any industry you want. I'll show you guys where it's on here. Um, yeah, hold on. Give me a second. Let's go to home. All right, and you come here and you go to market, stocks. We'll go sectors and industries. And here we are. This is the top 20 sectors that there is right now. You can pick any of these. You can trade any sector that you want. Doesn't matter to anybody else. As you can see, Tex has $19 trillion market cap, which is crazy. But all the money's being put there, and you guys can really trade anything you want. So I'm not going to be the one to tell you guys what you should do or what you should. And then it gives you the top performers in these trading. But what I like to do really is just come to here. As you can see, it's stocks. You just go to search for stocks, and then you find your sector. Okay, what do you want to be in? Say you want to be in energy and materials. It gives you a list of different stocks that you can go through, and what you can do is just go and look at these positions. You can go look and see which ones, see the prices on them. It takes a little while, but obviously this one we're not going to want to buy because the market cap is huge. But you find stocks in the sector that you want, and this is how you do it. And typically with swing trading, our trades are lasting anywhere from hopefully 2 to 3 days to 3 weeks or 2 months. I don't think it is really even swing trading if you're holding a position longer than 2 months. But if a position's doing really well, you don't want to leave that trade. One that is doing really well is Micron, MU. Micron is doing amazing. It went up like crazy these past whatever months. You can see it went from 226 to 326. And usually I say don't trade small, don't trade expensive stocks, but this one can be a long hold option for you if you want it to be that. You would have wanted to hold this for 2 months because since December Wednesday the 17th, it's went up over $100, and you can imagine how much money people would be making if they had a lot of shares of that stock. So this is an example of you want to hold the position like this. You want to hold one that's not showing any signs of weakness, and it just keeps rising, keeps rising. Rise with it. Stay in the position. Don't leave the position. Don't force yourself to leave the position, because that really doesn't make any sense to leave a position that's doing this well. The next thing that I'm going to say, and the last thing, is that when you enter a position, don't expect to win all these trades. The thing that's great about this strategy is, like this trade right here that went up 51 cents. If you have a 10K account size, which is not a very big account size at all, and you can buy 4,000 shares and you go up 51 cents, you made this much in 3 days. with not having a large account size, and these moves happen all the fucking time. This isn't some rare move that never happens. This is in 3 days. This is a 3-day move. So you don't need a lot of money to start with this strategy. You can make money, and the great thing is when you have that tight stop loss, because remember how I said earlier in the video, we're entering off the first 5-minute candle frame. We're going out to the bottom of the wick and entering right there. The first warm. If it could have been 3 reds, but then we enter off the first green. So you enter off the bottom of the first green, and you're only risking losing barely anything. So the great thing with this strategy is you could lose a bunch of trades in a row, 5 trades, 6 trades in a row, but once you win that 7th trade, you're still making out by a ton. You're still making out by a ton of money. You're still hugely making out. That's why I love this strategy so much, and I always recommend people to trade this way, because there's other strategies like futures and forex that have their advantages where you don't have to be in the position as long, and you can just trade for 15 minutes and you're out for the day. But in swing trading, you have to stay in the position for multiple days at a time, and you have to constantly be checking it. But on the flip side is it's nowhere near as risky. Like I just said, with the win rate is lower, yes, but you're not risking losing nearly as much money. And that's why I love it so much. And one thing I'm going to say before I end this video is, you guys, when you're watching the time frames looking for positions, do not watch the 5-minute time frame. That does not tell you shit. At least go to the hourly time frame, because this is going to tell you what is happening like over the span of days. We do not want to look on the 5-minute time frame. I know I just showed you guys a position off the 5-minute time frame, but as you can see, my thing is lagging and it won't even let me go to the hourly. As you're going to see when I go to the hourly time frame, if it lets me here, that it looks completely different than the 5-minute. Completely different. You're seeing a completely different thing. This was the move that I marked off right here, and look at how much smaller it is. Boom, boom. You would have exited somewhere right here was the position to exit. So you'd have been in here, boom. And when you look at this time frame, you can see the positions that don't make sense. You can see the bigger positions. You can see this fucking giant move right here that went from September 259 to 640. Like, you can see these big moves, and you can just see how much time that took to digest. That took almost a month to reach that full position. And that's where you can make the most bread for your buck. And I would suggest, when you have a smaller account size, to not take long positions like this. Try to take more day trades with this strategy and more 1, 2, 3 days trades, because you don't have enough money to be holding positions to make it worth it. You kind of want to get in the most volatile positions you can and try to make as much as you can. That's the strategy that I incorporated to turn my account size from $400 to now over 20K. So when you're first starting out, you're not going to make big returns. Don't expect to make thousands of dollars. And in this video, I'm just talking about how you can make good money. And good money is relative to whatever you think is good money. If you don't think making $200 off a $600 account is good money, then you're delusional as fuck. You have to work your way up with this strategy. And any strategy in trading, you have to work your way up. There's no spawning at the top of the mountain. There's no just becoming a big dog out of nowhere. It takes trades on trades on trades to begin, and working a normal job and saving money until you can stack it up, where you can make a trade like I just showed you with an account size of $10,000 only, and you can make $2,000 in 3 days. That's more than you're going to make at a job. That's more than you're going to make probably working $15 an hour for a month. And you can make that in 3 days. And as you can imagine, once you keep making more money, your account size keeps on stacking. Once, if you had 10,000, you made that trade. Well, now you got 12,000 to trade with. It just keeps stacking up. And what we want to do is make sure that we don't rush trades, even with a small account size, and make sure that we're not forcing trades, like I said, that don't make any sense. Showed you an example of trades you don't want to take. Do not just feel like you need to trade just because you need to trade. Trade when it makes sense to trade, even if you have a small account size, and I promise you, you're going to grow that account size and become rich. That's going to wrap it up for today's video. I hope you guys enjoyed this one. More videos coming soon. Like, comment, subscribe, and I'll see you boys in the next one. Peace out.